In trading, simplicity is the key. In here I am in AUDUSD 4-hour time frame, and this is exactly the type of price action that I must wait for in order to be consistently profitable. This is excellent price action. This is excellent price delivery. In here I have the set of parameters that I must base my analysis and my trading of in order to be consistently profitable. Number one is macro trend. So in here I am in the 4-hour time frame and price is clearly bullish. Keyword in here, clearly. I don't need to make an effort in order to see that price is bullish, meaning going to the upside. So price is clearly bullish with a lot of strength. Therefore, I must only look to get involved in I must only look to get involved in buy positions. I must only look to target buy side liquidity. Like this high, this high, this high, this high, this high, and this high. So only buy positions. So let's go into the 15-minute time frame. By the way, it would be this portion of price so that you get the idea. So 15-minute time frame. In here we have this high. Above it there is buy side liquidity, and in here below this low there is sell side liquidity. So in here price starts to go down. It creates this fair value gap and breaks quote-unquote structure to the downside. But many people might think that price is going to start to reverse, that price is going to drop a lot or something, but we must remember, and this is for myself, this is a reminder for myself, I must remember the macro trend and base my analysis of that, and eventually my trading, if I decide to get involved in any position, in a position. So in here we have buy side liquidity, sell side liquidity. Price creates this fair value gap. Price sweeps this sell side liquidity, starts to go up. In here price taps into a fair value gap. It continues going up. Price creates this fair value gap. This is a CB, sell side imbalance, buy side inefficiency, and this fair value gap would be a BC, buy side imbalance, sell side inefficiency. So price creates this fair value gap. We continue going up. Price taps into a fair value gap and closes above this high, breaking structure to the upside, which aligns with the macro trend. So price breaks this high, closes above it, and then what happens? Let's dive also, well, let's continue with number 2, which is macro PDRAs. I just talked about them, which is a fair value gap, this fair value gap, and this fair value gap, which then turns into an inversion fair value gap. If this fair value gap I extend it, price already broke above it and taps into it again. Now this fair value gap, this CB, would act as true support for price. So let's now dive into the 5-minute time frame. In here, like we see, this is the now inversion fair value gap. In here we have the fair value gap, and price has this high, this low, this high, and price then drops to sweep this sell side liquidity and tap again into the fair value gap. So it taps into the fair value gap, then sweeps sells a liquidity, but look at how this candle actually closes above the sell side liquidity, how this price closes above this low, indicating me strength to the upside. So we have this high, this low, this high, price sweeps sells a liquidity, and well, price taps this fair value gap and sweeps sells a liquidity, and the next candle immediately goes all the way up to the upside and breaks structure again. This would be a breaker. My entry, if I decided to enter, this is just the markup. I did not enter this on this setup. I did not enter on this setup. This is just a markup. So it sweeps, breaks, rebalances all the way down to this breaker, and this would be the micro signal, my entry technique. And the mathematical logic, which also is a great confluence, is that from this low to this high, I put a Fibonacci tool. So in here I can see I wouldn't like price. I would prefer price not to go all the way down to the 50% from this range, from this low to this high. I would at most like for price to go down to the 25% level, which is this line, or between the 25% and the 50%, because that would indicate me strength in price. And also, what else do I have? Well, yeah, let me see if I have something else. Yes, in here, in this candle, it left a long wick below. So if I put a Fibonacci tool from the low to the close, so if I put a Fibonacci tool in the candle, in the wick, the 50% would be this red line. And look at how precisely it taps right here. So in here is a 50% of the wick. Price taps exactly into this 50% that also aligns with the breaker, and price skyrockets to the upside. So that would be, all of these would be my micro signal and mathematical logic. And number 4 would be trade the momentum that favors the macro trend. In this case, it would be this candle, this up close candle, which indicates me a lot of strength to the upside. So basically, in here we sweep, break, rebalance to the breaker, and well, there you would decide if you open a trade or not. Like I said, in this case, I didn't get involved in a position. This is just a markup, but the logic is there, and I must remind myself of all of these points and to keep it simple, like I said at the beginning of the presentation. So that would be all. And also, look at how price reached all these buy-side liquidity levels. This one, and this one, which is the 4-hour time frame buy-side liquidity. It's very precise.